Welcome back to Market Day Report. I'm Tony St. James. We're approaching the noon hour, Central Time, and as we do, corn remains under pressure. Let's go to Chicago, where we're off 3 3/4 cents on the July at 4.16 1/4, and the December 4.34 1/4, down 2 1/4. It's a penny and a quarter off the day's low. Soybean trade. Now, we have seen positive trade in soy oil. Soy meal is trading lower and soybeans are lower. August most active at 11.38 1/2, off 3 3/4. November new crop 11.05 1/2. It's a penny and a half lower. And the wheat market, we've watched it go up now 2 dimes on the July. Chicago 5.61 1/4, and the September is up 18 at 5.78 1/2. Seeing some of that same trend line over with hard red winter wheat. July 12 cents higher, 5.92 a bushel. That's within a penny of the day's high. The deferred contracts are higher. Spring wheat, Minneapolis 17 1/4 higher on the July at 6.13 1/4. Deferreds 12 1/4 to 14 1/4 higher. But cotton is giving back the gains from earlier in the week. December, the new crop down 104 points at 74.30, could be in part due to a weak weekly export sales number or the potential for monsoon rains in India, which would help both cotton and sugar crops there. You know, Tommy Grisafi's with Advanced Trading, and what a nice surprise. We have you in the studio today.
I really only came in because, as you know, Tammy's sitting to our left, but they can't see her. That's the whole benefit of being here. She is the star. But we hear her laughing down the mic. I ran in the set and I didn't even have a mic on, and you said lean over, talk louder.
Yeah, I'll let you lean over. You know, speaking of leaning, we've got First Notice Day coming up. Are you watching that?
Yeah, and that's why when you see that July board, you see the July down more than anything. That July futures is definitely saying it's confessing its sins, that there's cash grain that has to hit the market based off those futures, and it's a very much of a cash trade when you talk about futures and the river system and the delivery process. Our clients are currently out of July, but at Advanced Trading, we deal with hundreds of grain elevators, and they're still dealing with the July futures. So what happened, Tony, and I'm sorry to say it, and I'm doing it live on air, is that the most expensive corn crop the American farmer had ever produced is being sold at the low here as these July futures. Now, will that be the lows for a long time or just a short period? To be continued, because as you know, we have a USDA report tomorrow. So expect fireworks before the 4th of July.
Okay. On the opposite side of that, we're seeing double-digit gains out of the wheat market. Have we maybe found a low in there?
I feel so much more comfortable saying we've made a low after we broke more than we rallied. We had that $1.70 rally. Feels like we broke $1.80. Definitely the Board of Trade contract broke more than it had rallied. KC's still holding in there. But the Minneapolis wheat erased its whole rally and went 20 cents lower than that. Here's the deal. Wheat, it's more affordable to come to America and buy wheat than a country to produce it. But even with the price of wheat being that low here in the States, foreign countries aren't even going to America to buy the wheat. We had a country had a grain tender the other day. 5 other countries were able to sell wheat to another country cheaper than America can. So although we're great at growing wheat, we're not competitive still in price, which makes you think, yeah, it's the low end, maybe in the world market, and we do know we have problems in Russia. So feels better than it did yesterday, like seeing that plus 20 in wheat. Down in corn before the USDA report really concerns me. Some folks thought there'd be short covering rally. We just haven't seen it yet.
Yeah, we'll get that acreage report coming up tomorrow. Plus, we get the quarterly grain stocks report. Speaking of reports, we're picking up a quarterly hogs and pigs report this afternoon. We'll come back and talk livestock with Tommy. This Market Day report continues after this. You found Market Day report. Let's jump into livestock, and we've seen some positive movement in the week, but not seeing it right now for live cattle. June up 60 at 193.52. But really, the eyes are on August. That's where the majority of the trade is, 186.55. It's down 20 cents last check. And for feeders, same story there. August off 60 at 261.17. That weekly export sales number was really somewhat positive for livestock, both cattle and for hogs. Are hogs picking up on it? They running higher? Nope. We're down 87 on the July at 89.02. August now has lost $1.25 in morning trade, 87.72. That after running things up. So let's start with the cash cattle. Tommy Grisafi is here in the studio. Cash cattle, I don't think there's anybody that's betting against $200 this week, right?
Yeah, the fundamentals have kicked in, right? We've had some volatility this year. We've had some huge sell-offs. But in the end, the guys who really know cattle said, watch out. The fundamentals are going to kick in. The numbers aren't there. We even had last week when we had that report on Friday, it felt a little bearish, but the market had a bullish reaction. So the market is telling you that the cattle numbers are tight. A lot of people, when you talk cattle, you talk about, can people afford beef at this high of a price and for how long? Time will tell. You're seeing a couple stocks in the stock market down today, and it always makes people nervous if and when the stock market would have a big pullback. But the biggest risk to the cattle producer right now is that when you look at all the commodities, the cattle is one of the last commodities we could say the word cattle and profit. You can't say corn and profit, soy and profit, wheat and profit, hogs. Hog board looked horrible there. And let's not, when you have a profit, let's take it or let's protect it. At least that's what we tell people, Tony.
Okay, so hogs and pigs report coming out from USDA. That's this afternoon. Could that be the impetus for moving us higher?
A little bit, but there's plenty of inventory out there. Of course, we got to keep an eye on demand. Everyone wants a government report to fix it, but we have so much supply that the way the numbers come out, it shouldn't be enough.
Okay. You mentioned Wall Street down, NASDAQ, S&P, they're all just fractionally higher here right now. NVIDIA's been a big name. CrowdStrike, Constellation year over year. But Walgreens probably the big name today, and the idea that they'll be closing stores. About 30 seconds in here.
Yeah.
How much does what happens over on the equity side affect the commodities?
It very much affects it. Walgreens, a Darlene, a Chicago company before they moved, down 25% today. Levi jeans clothing down 17%. It's easy to go on TV and say NVIDIA, but later today on the Cow Guy Close, we're going to have just the guy to talk about it, Mr. Adam Johnson. He's been so right about NVIDIA. And last night before I went to bed, I watched a special about the Titanic. We're going to ask him, what if the stock market doesn't have enough boats if this ship starts to sink, Tony?
There you go. That's what's coming up on the Cow Guy Close. Tommy, great to see you.
Thank you, sir.
Always a lot of great information. Thank you, guys. Looking forward to Cow Guy Close.